tax withholding, it's something that takes a huge bite out of every paycheck in America. But here's what's wild. This system only started in the 1940s because the government needed a reliable way to fund World War II. Before that, everyone just hoped people would save enough to pay their taxes once a year.
That's bringing back memories of my first real job. I had done all these calculations about what I could afford based on my salary, and then reality hit when I saw those withholdings.
You know what's fascinating? The IRS estimates that without withholding, the tax collection rate would drop by about 40%. It's basically the government saying, we know human nature and we're not taking any chances.
So you're telling me this somewhat annoying system is actually protecting us from ourselves?
Exactly right. And it's more sophisticated than most people realize. Your employer becomes this tax middleman, carefully calculating deductions based on complex factors like your filing status, number of dependents, and even things like student loan interest.
Hmm. But how do they figure out exactly how much to take? It seems like everyone's situation is different.
Well, that's where the W-4 form comes in. Think of it as your personal tax blueprint. The more allowances you claim, the less tax gets withheld. But here's the catch. If you claim too many, you might end up owing a huge bill in April.
That reminds me of when my friend got married, and both he and his wife kept their withholding at the married rate. They ended up owing thousands because the system assumed each was the only income earner.
Exactly. And that's a perfect example of why understanding this stuff matters. The withholding tables for married couples are designed assuming one spouse might not work. When both do, well, that's when surprises happen.
So, what's the solution for couples in that situation?
Many tax experts recommend married couples withhold at the higher single rate if both work, or use the IRS withholding calculator to get it exactly right. You know, studies show that about 75% of taxpayers get refunds averaging around $3,000, which means most people are actually over withholding.
Well, that's interesting. Isn't that basically giving the government an interest free loan?
You've hit on something really important there. Financially speaking, it's better to have that money throughout the year. But here's where human psychology comes in. Many people actually prefer using withholding as a forced savings mechanism.
That makes sense, but let's talk about what happens if someone gets their withholding wrong. Is it just a matter of paying more or getting less back at tax time?
Oh, it can be much more serious than that. The IRS requires you to pay at least 90% of your tax liability through withholding or estimated payments during the year. If you don't meet that threshold, you could face penalties of up to 3 to 4% of the underpaid amount.
Uh oh. That doesn't sound good. How do people avoid that situation?
The key is staying proactive. You can actually adjust your withholding at any time by submitting a new W-4 form to your employer. And here's something most people don't realize. You can specify an additional dollar amount to be withheld from each paycheck if you need to catch up.
So, in a way, the withholding system is actually doing us a favor by automating all of this?
Precisely. And consider this. For self employed individuals who have to make quarterly estimated tax payments, they're essentially creating their own withholding system. About 15% of taxpayers have to do this, and the compliance rate is significantly lower than for those with automatic withholding.
Looking at it that way, I guess I should be thankful for tax withholding, even if it makes my paycheck smaller than I'd like.
And here's one final thought that might change how you view withholding. It actually helps stabilize the entire economy. Instead of having huge swings in government revenue and consumer spending around tax time, the system creates a steady flow throughout the year.
That's actually pretty brilliant when you think about it. Any final advice for our listeners?
Just remember that withholding isn't set in stone. It's a tool you can adjust to match your financial situation. Take the time to understand it, Use the IRS calculator and don't be afraid to make changes when needed. Your future self will thank you. Will